Why do startups fail? In this video, I want to summarize what we've been talking about and wrap this little series up. Startups are by their nature very high risk, but the reasons for failure may become apparent after the event, and very often there's a forensic analysis to understand where things went wrong, and we can use this forensic knowledge to our advantage if we think about what has come out of all these hundreds and thousands of failed startups. Forewarned is forearmed, and we've looked at 21 critical issues in 5 separate categories. We've looked at what I've called strategic pre-investment issues, where there is no market need for the product or service. They haven't got the right team together. The product is unfriendly for users. It's a great idea, but there's no business model behind it. The startup doesn't know how to make money. There are legal challenges from bigger competitors, which basically wrap you up in courts and suck all the money out of the organization. There's a lack of passion from the founders, which basically ultimately will not lead to them committing 110% to the business, and therefore lead to a significant weakness and potential failure. There's no investor interest. They basically just haven't produced a sufficiently compelling product, service, problem, solution issue to make investors want to fund it. And indeed, there may be sector-specific issues, some of which I illustrated, which may basically sort of stop the startup in its tracks. Now, we then looked at some external issues, which I characterize as being post-investment, but frankly, they can come up at any time. You can get out-competed, which is always a risk. If you see it happening, you might be able to take action to mitigate it. You may bring your product to the market too early, or you may scale your growth too quickly, leading to financial issues. And you may have geographic issues, both in terms of the failure to scale on a geographic basis, or indeed with the geographic location of your teams. We've looked at some operational issues, cost pricing issues. Cost pricing basically is all about, can you sell at a high enough price to make money whilst being at a low enough price to scale, and can you manage your costs in a way to keep your business on the road and not running out of cash before you can get to break even. You can find that the team does not know how to market, so they can produce a great product, they don't know how to sell it. They may ignore customers, they get tunnel visioned on the product itself working inside the company and fail to look and interact and get feedback from customers. That can be fatal. And of course, they can fail to pivot. When they realize that the product or service is not working as they want it to, there may still be time to go and do something else with it, but that time is probably short and needs decisive action. We've looked at key management issues where the management lose focus. They love producing the product and service. They don't like all the other responsibilities that come with running a business. There may be conflict within the group or conflict between the group and investors, and that can be fatal and has to be dealt with very promptly and very quickly. And that might mean taking an individual out of the founding group, or it may need even trying to change the investor group. Where founders and investors don't use a network is a missed opportunity, but it can, lead to the business not being able to grow and scale fast enough, and ultimately not meet targets or milestones and therefore fail. So network, exploitation is critical, and of course there's burnout. Just working too hard in a crazy culture where nobody gets any sleep, and the whole thing basically becomes then very fractious and will fall apart. Finally, looking at financial issues, companies run out of cash, and that's down to a combination of spending too much and not earning enough in terms of revenues. But cash management and cost management and financial management of the startup, of course, is critical. And then where the pivot has gone bad, you've made the pivot, but it hasn't worked. It hasn't worked quickly enough. The business runs out of cash. So those are 21 areas where startups can fail. And at the start of this, I told you that 90% of startups fail. 90%. So your mission, in the famous words of Mission Impossible, your mission, should you choose to accept it, is to only invest in the 10% that don't fail. Of course, much easier said than done. But if you're aware of the reasons for failure. And you can keep these in mind when you're screening potential investments or you're working with startups. You may be able to see the warning lights coming at you, and you may be able to do something about it before it becomes a critical issue. And I sincerely hope that you do and your startups succeed. And I hope that these videos help you in some way to achieve that. So why do startups fail? That's the end of this little series of videos. I hope you find them useful, and I'd be very interested to hear what you think about them in due course.